Well, g'day there everybody. Thanks a lot for joining me on this Thursday afternoon market recap. I hope you are doing well, no matter where you are located around the world. Very interesting times in the markets currently underway. What we have seen today is the continuation to the upside after the pop that we began to establish earlier in the week. What it looks as though we are doing on the S&P 500 to the untrained eye is essentially backtesting this 2,870 area. Again, a lot of people are recognizing that of a bull flag, which could be underway at the moment. What is important is that we haven't actually taken out the swing highs. So for all illustrations really considered, this does look like a textbook continuation pattern. We've got the back test of the all-time high, old resistance, new support, bull flag breaking to the upside, and of course the bounce off from these rising exponential moving averages. However, what is at stake here is the possibility and the potential of this continuation failing. And if you do see this failure more or less taking place from the current levels where we closed at during today's session, we can push on up another 20 or so points on the S&P 500. But really the battle that you want to pay attention to is the all-time high. If we do push on up a little bit higher and we begin to see that of a reversal, that is essentially going to set up that of an intermediate correction. Now, intermediate corrections generally happen from these types of scenarios, what we can look back in retrospect and call that of a false breakout, when everyone was technically bullish on the market, but they didn't consider the opportunity of a pullback after a relatively sort of exhaustive move to the upside. Have a look at these oscillators on my screen. You can see that we are pushing back up into overbought territory. We are getting sell signals collectively across the board. The ADX still doesn't like this pop, which is interesting. However, the commodity channel index has stabilized above that 100 area. So technically speaking, we are getting a lot of sort of bifurcated or even diverging signals within the technical landscape that we pay attention to as technical analysts. And for me at the moment, considering where the Dow Jones Industrial Average is, yes, it is seeing that consecutive pop as well, or at least it is moving into short-term uniformity. However, we have not broken above the all-time highs. It does look as though we have a little bit further to go. I was a little bit hesitant during this period over here, thinking, well, we may have sort of exhausted ourselves, but it does look that we could have another 200-300 points until we definitively close this window on the Dow Jones Industrial Average. Think about it like this. If the Dow Jones Industrial Average comes up to 26,435 and we see the S&P 500 not definitively breaking above its swing high, and if we go into the NASDAQ as well, if we haven't seen the NASDAQ close and continue above its all-time high, well then the odds of this bounce failing at these higher levels, or what could be that of a sort of a lower high, go up sort of exponentially. So again, on the surface of this market, it looks as though we are setting up that of a continuation. I can make that argument all day. In fact, it is the easiest of the two arguments to make, that this is just going to be that of a textbook continuation. But when you take into, of course, consideration some of the parabolic moves we have seen in a bunch of companies, let alone some of the major names breaking to the downside, and a lot of other companies coming back up to retest macro resistance areas right after long-term consolidations, it does look as though the resistance areas collectively across these markets may well and truly hold. And if that is to sort of play out, mixed with these oscillators again as overbought, overextended, and as overheated as what they are, stretched with again the short-term sentiment of market participants, it could open the door for a very abrupt, very sudden shift to the downside. And that is what I've been speaking about on this channel and what I've been warning people about. So we've been looking for the pop. We are sort of the midpoint of this pop. It could drift on up a little bit higher. But again, what we want to see for confirmation of this move higher, if it is going to be that of a trend continuation, is confirmation above the highs, continuation collectively above, or at least the markets in uniformity, and consecutive closes above, and also participants, right? We need to see participation in the trend breakout also. So think about those very important concepts and apply them to the market as you choose fit. For me, I'm not jumping into really any long trades whatsoever. I'm navigating these individual stocks and also the markets to potentially set myself up, and a lot of people who listen to me over the weekend classes, to set ourselves up for potentially some fantastic short-term or at least intermediate shorts on the horizon. If I go through a bunch of these tech companies and also more of our top 12 individual trade list, you can see that we are starting to see and establish a little bit of volatility in these stocks. Again, this is after the parabolic rise that we did take advantage of on the way up. We closed these trades out as high as we possibly could. But again, you can see the formations for potentially that of rollover patterns, or at least some very sort of V or double top sort of patterns under construction on Apple, for instance. If we go into Amazon as well, do you want to take these types of trades? Generally, this is looking towards the end of its most recent rise. You can see that we have moved very aggressively, really from June, from about 1,600 up to 2,000. We're just holding below it. So again, that psychological round number, 1,989. And these are not the types of trades where you want to place tight, sort of aggressive long entries. You'd rather sit back, allow for this volatility to shake out. And what may be under construction is that of a double top as well on Amazon moving forward. Boeing Airlines is one of my favorite trades, I believe, moving forward. And the reason I say that is because we have a very defined resistance area. If I zoom out and show you this long enough, and essentially what we were talking about a lot with the majority of stocks in the markets was to see the pop to the upside. And we were really focusing on roughly this 355, 356 area as resistance. What we were looking at was to see we'll wait for price to come on up into this area, then wait for reversal candles to set up. Now, what we don't have today is a true reversal candlestick. However, it is that of a high wave spinning top, and this is a critical sort of location on the chart itself. If we begin to see, all right, at least during Friday's session, that of a reversal candlestick printing up at 358, I'm proposing that there is an incredible trade on this, more or less from about 356 all the way down to 320 with very, very nice risk and reward ratios. I'm going to speak about that again in more detail over the weekend, but the good news is that we have seen this pop. It has come up to 356 as we spoke about 6 days ago now, and this could be the very early sort of positioning into Boeing Airlines come Friday, depending on what the markets do. Again, the big disclaimer at the moment is what happens with the US financial markets. Most importantly, are they going to break out, hold above their respective all-time highs? And is the Dow going to come all the way on up and close this open window that we've been speaking about ad nauseum for the majority of 2018 up at 26,435? But again, you can see how all of this is coming together and fitting together to give us a really good understanding and grasp on what the markets are doing, but also how to take individual trades as well. Baidu's still lingering, around 215. It has actually seen a little bit of a pop today. It's good to see a little bit of a double bottom begin to set up. I'm not convinced if this is going to be a legitimate double bottom, but we're back at 222, which is good. Who knows, it could run up to about 230. I don't think, however, based on this type of pattern and generally just how stretched the markets are, that we are going to see a slingshot up to 245. That would be fantastic, but I'm not really, counting on it, so to speak. We've got Caterpillar again getting a little bit of a bid. This is quite interesting as well. A lot of these companies are starting to take off, which is really good. You can see these past entries. I was a little bit hesitant on this earlier in the week, again, much like the Dow Jones Industrial Average, and we were speaking about rolling out of these trades to the upside. A lot of these trades, by the way, were short-term bullish, taking considerations of these markets popping off from support, which is what they have done, but ultimately failing. So again, the jury's still out on Caterpillar, whether or not we are going to close this gap at about 151 or take us all the way up to 155. If you're out of this trade, I wouldn't blame you whatsoever. I'd actually congratulate you for doing the right thing, really, when it comes to managing these types of trades. It has been relatively volatile, and for a large portion, we still haven't seen a true commitment of these markets higher or lower. They're still hanging out more or less around or very close to their all-time highs. But most critically right now is the Dow Jones still yet to close that open window. We've got COP looking to set up that of a bear flag at the moment. It is holding up around this resistance area, roughly between 74.10 and down here at about 71. Largely, these stocks are moving absolutely nowhere. If you just take into consideration resistance and support down here, you can see really since the beginning of July, we've really gone nowhere. The net movement is absolutely nil. If I continue into CVX, you can see we're lingering about that 115 entry. It didn't trigger below 113. If I can just bring this into perspective for you. Again, this is looking like a bear flag, so you can begin to see a little bit of bifurcation in the individual stocks with the markets themselves. So some interesting signals here. I wouldn't be jumping or trying to find the bottom of this stock. I'd simply be leaving it alone. Google is setting up that of a stair-step looking type of continuation pattern. Again, taking into consideration what the NASDAQ is doing, you might see a little bit of life sort of spring back into Google short term. But if we do see the NASDAQ roll along with the S&P 500 below that all-time high, watch out below, everyone. It's going to get very ugly very, very quickly. And this is a major warning for you. We've got IBM, which is really good after all, breaking out to the upside. This was after this stock. I'm trying to bring this into perspective after it's gone absolutely nowhere. Have a look at this. It went to sleep and it's only really woken up during today's session. However, very similar to Caterpillar. I'm not sure if we should be placing all that much sort of legitimacy around this breakout. It would be good to see this run to 155. We've been expecting this. However, over the past week or so, we have started to pull back our expectations of just how high and how fast and how quickly it is going to move. It's good to finally see it. However, if you are in this trade, again, I just lock in my profits on it. If you're out of it, it's okay. Don't worry about it. We'll look for a trade over the weekend. On this particular stock, it looks to be closing the window at 150, but again, potential it runs up to 155. Has taken a little bit longer than what we imagined. That's the art, so to speak, of trading. We've got Netflix also reversing off 340. It's really just stuck between 380 and 340 at the moment. Originally, the trade was from 328. We were looking at this moving to 392 and even $400 per share. So that little bit of a pullback most recently over the past 2 weeks, it's stabilized much like the market. It has popped. Problem is this a legitimate pop? My critique of this stock is no, it's not. This is just another temporary bounce. This is the market noise as we ultimately produce out of a lower high before we move into that intermediate correction, which will then most likely produce a higher intermediate low, which will then take out ultimately these highs over here. But that's a number of months away. It's not something that's going to happen, say, by the end of October, or at least if it did, I would be very, very, very surprised. Final stock right here is Tesla. Tesla's seeing all sorts of a continuation of the volatility, really. It was looking as though we were breaking below 260. That was good. We were talking about this bouncing once again, much like the majority of stocks coming back up to close, or at least backtest old resistance. That is essentially what Tesla is doing. We've got this bearish trigger placed here at 275.60. You can more or less keep that because, again, we're expecting this to rally on lower volume, which is happening. This is setting up what could be that of a bear flag, and we could see a roll and a break below 275.60 on Tesla. I think that is a very exciting sort of trade on Tesla moving forward. And again, I'll give you a little bit more analysis on that over the weekend, or at least in more detail as we have that longer weekend analysis class. Also, I just wanted to touch on the Russell 2000. It is pulling back ever so slightly, but we're not really seeing aggressive sell side activity, which is good. It looks as though we could be simply back testing this old resistance as new support. If I bring this up and show you it, you can see 1 touch, 2 touch, 3 touch, and now we're starting to react from the top of this retest right here. So again, it looks like a little bit of a prolonged sort of bull flag. We could see that last little pop up to 1756. Makes a little bit of sense. It's not going to be perfect, but there is the possibility that, again, the S&P just breaks above its swing high too. So we'll have to monitor that. We are very close to our all-time high and ultimate target on the Russell 2000. So again, if you find yourself not really participating in much trend, or at least trading activity, I should say at the moment, really congratulate yourself. It really is the smartest thing to be doing, the most intelligent decision at the moment, because the markets are bifurcated. We don't have the confirmation of the trend continuation. At the same time, risk is exponentially high for that of an intermediate top, which will lead us into that of an intermediate correction. I'm not talking about the primary trend reversal of the markets themselves, but we could be, again, in the very early stage of setting up a topping type of pattern, especially on the S&P 500 and the NASDAQ when it comes to the intermediate time frame. If this trend line breaks, look out below. We've got the bearish entry at 7789 to take advantage of that if you want to trade the Qs. The same is true for the S&P 500. Although we don't have the trade entry, you can see it will be placed below this trend line over here, but we're just going to have to monitor this interesting little chart setup that is under construction at the moment. All right, so that's the market analysis as at this Thursday. Enjoy your evening, everybody, right around the world. Wish you an enjoyable night, and I'll be back with you most likely on Saturday in that private class as we sit down and go through the weekend's Pivot Point Pro. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.